Let's start off with the overall markets on Friday. Marginal gains coming to the fore. What is it going to take to push the markets higher in Nairobi?
Good morning, Eleni. Thank you for having me on. We're in a very critical time in the market right now. We have a lot of mitigating factors, the major ones being the looming drought, and we also have inflation as a worry. If you look at those two, it puts us at a very critical time. Also, we have levels of political risk factored in the pricing of most of these stocks trading. Looking on maybe in the first half of this year, I expect the lull to continue. We've already gone below the support level, which was anticipated for the index at 4,000 points. But we always remain optimistic and hope as things move on, we'll see some recovery.
Well, I like your optimism there, Robert. When you look at the shilling, it seems that we're seeing a lot of pressure, and we also know that the central bank governor has come out and said that it's due to speculation, and this is why we're seeing pressure on the shilling. Do you think this is going to be short-lived, or do you think that it's something that is sustainable? So, in other words, sustained shilling weakness going forward?
I think it will not be as short-lived as we want it to be, for one, because this is pegged a lot to the crude oil prices. The shilling has weakened. According to the central bank governor, he says that speculation is that the oil prices will affect the shilling in the near term. And if we are to look at the prices of oil as a factor, I don't think it's going to be a problem sorted out anytime soon. We have Libya as the 11th largest exporter of oil in the world and the first in Africa. As long as the problems persist in Libya and other countries in Saudi Arabia, in the Middle East, which are facing these political wrangles, we may have a really big problem when it comes to oil pricing, and oil pricing is pervasive in all aspects of the economy.
Well, Robert, you were saying you were worried about inflation and a looming drought, and also talking about a much higher oil price going forward, and it seems that Japan is going to be importing now more oil to try and cover the energy losses because of the nuclear reactors that have been blown up. We're sitting at an oil price of $111 a barrel. Then that counteracted by another drought in Kenya. What are we looking at in terms of inflation, and also just keeping in mind this is in the backdrop of the fact that we saw an interest rate cut this year out of Kenya?
There's so many things hitting us from all ends. Inflation is the biggest problem we have, and with it we have the fuel problem. The interest rates may have been cut, but again, looking at inflation as a worry, we have the purchasing power of most Kenyans reduced, meaning there's a higher demand for credit because the money they have cannot get them the same worth. And I think the banks will be looking to cash in on this because the banks thrive on the debt market. But I think as we move forward, we may have bigger problems than we actually think. I don't think we should trivialize the matter of inflation because it's a very real problem in the country.
Let's turn our attention to some of the biggest movers coming through on Friday. Bamburi dropping a further 2.7%, sitting at 180 shillings. And that's even after one of its biggest shareholders, the National Social Security Fund, said it was not seeking to divest its stake in the cement manufacturer. Why did we see such pressure coming through even after this news?
I think it's the industry the company finds itself in. The cement manufacturers are in deep competition with each other. We also have cheaper imports coming in from abroad that further exacerbates the competition locally. And if you look at Bamburi cement, they have lost their market share considerably from last year. And I think that's maybe one of the reasons one of the investors withdrew. And we may have to see that factored in the pricing of the stock later on. But I think it's really much of an industry problem. We have a lot of competition in the industry, and most of these players have to cut their prices.
Robert, I mean, that said, would you be buying into a company such as Bamburi? I mean, you were talking about cheaper imports coming to the fore. Does that mean it's a no-go area for many investors? And of course, this is why we're seeing pressure.
Looking at the share price right now, I would say it's more or less 50-50. It's relatively inelastic on demand. It's more or less like some of the banks we have, KCB. So yes, I would be buying, but I would buy with long-term prospects, because I think anyone who buys into Bamburi right now is going to lock his money for quite a while before we see any returns being made. If anything, I anticipate a further dip in the market value of these stocks.
Robert, touching on Safaricom and this stock gaining 1.3%, we heard from the central bank that it's talking about harmonizing money transfer systems, which of course currently offered by Safaricom and various other banks. Is this going to be net positive or negative for Safaricom?
Okay, I've not had that. Maybe I'm behind on the news, but last week the opposite was actually said by the competitors for Safaricom. Actually appealed for a common platform. I don't know what you mean by harmonize, but if it means having a common platform for each market player to have the mobile money transfer, I think that was thrown out of the window for now. But if it's indeed put into effect, it will hurt Safaricom more than anyone else. But the consumers will benefit greatly from such a facility.